Earlier this week, we got a call from UP in North Carolina who wanted to know about Ollie's Bargain Outlet Holdings. Remember those guys? That's off-price chain that used to be, well, let's say, one of my absolute favorite retailers. What changed? Well, the bull thesis was tragically interrupted on December 1st when Ollie's brilliant founder and CEO, Mark Butler, frequent guest of the show, died suddenly of natural causes. I love that guy. Now, the stock had already been devastated over the course of 2019. The company was having a rough time even before Butler's death, but it seemed like they'd just gotten their groove back in the fourth quarter before we got the sad news of his passing. Since then, though, it quickly fell out of favor. It's now down from 65 at the end of November to 54 today. That's off 17% during a period where the S&P up 7%. So when UP asked me about Ollie's, I was reluctant to recommend it because I was worried about a leadership vacuum, thought maybe something else was wrong, and you couldn't just cuff it and say, hey, looks good. But after taking a fresh look at the fundamentals, I'm ready to give Ollie's my blessing for the first time in ages. First, though, you need to understand what went wrong last year. In March, Ollie surged to new highs after the company reported a fantastic quarter, stock climbing to 103 at its peak. As an off-price chain, Ollie's can't really be beaten by online competitors, not even by Amazon. Why? Because they already offer the best, lowest prices. Remember how this model works. They buy excess inventory from distressed retailers for next to nothing. You needed to get the inventory out, and then they sell it to you at a nice markup that's still much cheaper than you can find anywhere else. They also had a terrific regional to national growth story. We like those. When it works, say, in Florida and Pennsylvania, it could work across the country, allowing them to put up a lot more stores than most companies. So what was amiss? Well, let's fast forward to June. Ollie's reports a mostly better than expected quarter, with one glaring flaw: not so hot same-store sales. Up just 0.8 when Wall Street was looking for 1.2. Not the end of the world, but the stock had just run a lot. And here's where that's when it started to really slide for good, sinking to the high 70s by the time the next quarter rolled around in August. Now, clearly the sellers knew what they were doing because those August numbers were genuinely bad. A top and bottom line miss, coupled with same-store sales that were down 1.7%. The problem was straightforward. In its haste to put up new stores, we like regional national, but we don't like fast. In its haste to put up new stores, Ollie's hurt its existing ones. Worst of all, management cut their full-year forecast. Kiss of death, right? One bright spot. Mark Butler explained that these were short-term problems. They worked through them, but the market didn't believe him, and the stock lost 27.5% in a single day. Ollie's ultimately bottomed at around $55 in October. Then it started inching up again. It was back up to 65 by the end of November. Then we got the tragic news of Mark Butler's death over Thanksgiving, and the stock immediately sells off. He was a great CEO. Losing him really shook Wall Street's confidence, which was only a little bit rattled by that forecast cut. When Ollie's reported a few days later, they delivered a strong quarter. So it seemed like that their problems were under control. While the stock jumped 15% in response, shareholders used to use that rally to start ringing the register. They wanted out that bad. Without Butler, they didn't want to keep betting on this turnaround. I didn't want to either. And that's why Ollie's has spent the last 2 months sinking steadily lower. There's no need to overthink this move. Mark Butler wasn't just the founder and CEO. He was the company's public face and its greatest cheerleader. I can tell you that losing him caused people to lose confidence because that's what it did to me. We knew Mark Butler, but we didn't really know much about Ollie's bench, the other people who worked there. Without his leadership, it felt too risky to stick your neck out on a situation that doesn't have much visibility. Plus, this market's been so hot that it's particularly for this cheap retail, the ones that are off price, that there was no need to stick your neck out. I mean, it's not like we had a shortage of winners in this huge cohort that everyone's fallen in love with. Now, though, the averages have run up dramatically, giving us a new appetite for bargains, of which we know that there are few and far between. And so, Ollie's might be one of those bargains. After spending the last couple of months getting hammered, the stock now sells for 22 times next year's earnings estimates. That represents a slight premium to the S&P 500. But at its highs last year, Ollie's was selling for 45 times the earnings projections. So relative to where it was, it's definitely a bargain. This is the cheapest this stock has been in years, aside from earlier this week when it briefly dipped below 50. In a market that keeps flirting with record highs, Ollie's has been left behind. If management can keep turning things around, if they can live up to Mark Butler's legacy, then the upside could be enormous. So can they? All right, let's talk about that bench. After doing some homework, I feel a lot more comfortable with Butler's successor, John Swigert. He's the new president and CEO. Swigert's an old hand who's worked in the discount retail industry for 27 years. In 2004, Ollie's hired him to be their chief financial officer. Then in 2018, he got promoted to being chief operating officer. In other words, he was an integral part of the team when the company was growing like a weed, and the stock soared into the stratosphere. Still, I had to be sure about this guy, so I asked the best retail analyst in the business, Matthew Boss at J.P. Morgan. He told me Swigert was Mark Butler's right-hand man for 16 years, and he was clearly Butler's intended successor. I found that encouraging. How about the rest of the bench? Well, take a look at this slide from the company's last deck a little over a year ago. Ollie's management team is packed with experienced retail veterans. If, like me, you were a believer in Butler's leadership, you should trust the team that he spent decades putting together. Take those management worries off the table, and you're left with a pretty good story. Ollie still has a terrific in-store experience that never changed. Incredible deals you can't find anywhere else. It still has that regional and national story I like so much. Company has 349 locations across 25 states. They believe they can grow to 950 locations without a problem. It's a 170% increase. Sure, they ran into a serious speed bump last summer when they expanded too quickly, but it seems like management learned that from that mistake, and they've now got it under control. Most importantly, off-price is in the sweet spot here. That's why I like TJX and Ross Stores, and I like Burlington, and it's why I like Ollie's. Think about what we heard from Columbia Sportswear earlier this week. Because of the trade war, retailers placed huge orders last summer in order to get ahead of the tariffs. Then we got phase one trade agreement with China, and the coronavirus outbreak put the kibosh on tourism. Well, tourism-driven shopping then took a hit, too. Now many stores have an inventory glut, meaning they'll have to sell the stuff to companies like Ollie's for pennies on the dollar. Your win. Finally, after spending much of the last year in the wilderness, Ollie's is starting to pick up institutional support from both big investors and the analyst community. When the stock got slammed on Tuesday, Piper Sandler published a note recommending the stock with an $83 price target. Even better, J.P. Morgan's boss, again, he's the undisputed axe in retail, just pounded the table on Ollie's because there's a lot to like about the business. And at these levels, the risk reward is just too enticing to ignore. By the way, the company's presenting at Boss's Retail Roundup Conference this spring. I bet that will be a positive catalyst. The bottom line, if you want to go bargain hunting in this market, I urge you to look no further than Ollie's Bargain Outlet Holdings. Yes, I was worried after the company lost its visionary leader at the beginning of December, and knowing him personally, I just couldn't imagine the company without him. Now that I've done my homework, though, I think his successor is up for the challenge, and the stock has become ridiculously cheap here and deserves to be bought. Let's go to Paul in Kansas. Paul.
Hi, Jim. Good to hear from you. Hey, I had a question about Walmart stock. I've noticed since mid-December or so, it's been trending downwards, about like $9 to $10 a share, roughly. And I didn't know what you thought if it was going to keep trending down for 2020, or that was just a temporary blip.
You know, the other day, one of these research firms that does channel checks said that Walmart is going to miss the quarter. That would surprise me, but it has put a chill on the stock. So I have to pick other retailers because I am concerned that maybe there's something I don't know and don't understand about why things aren't great at Walmart. I think they probably are, but I don't have that level of conviction I'd like to have. Let's go to Kathy in Indiana, please. Kathy.
Hey, Cramer. Thanks for helping 3 generations of my family make good investment decisions.
Wow. I love that. 3 generations. Wow. Someone must be very young. Someone must be very young, too.
Well, my kids and my parents and us. So,
oh,
yes,
fantastic.
Yes.
Thank you. That's great.
Yes. I'd like to discuss Kohl's, Cramer. I'm a club member who owned Kohl's and sold Kohl's, and it still irks me. I'm a mom and know many moms who love Kohl's. We can get everything at Kohl's. We love the coupons, the Kohl's Cash. Kohl's has the name brands our kids love. And the recent affiliation of Fanatics and Amazon should have made this stock a winner for everyone. With earnings coming up, do you see any reason or opportunity to get back in? And do you think an Amazon acquisition of Kohl's is a possibility?
Well, I don't think Amazon wants to buy Kohl's, but yeah, Kathy, because they're already getting the best of Kohl's without having to pay any money when you can return stuff there. It's a great deal for Amazon. Turned out to be not that good a deal for Kohl's. Why did I turn on Kohl's and you're a member of the ActionAlertsPlus.com club? Because they missed what they said they were going to do multiple times. And in the end, I just got fed up. You can miss 1 time, 2 times, but you can't just whiff multiple times. And that's what they did. Now, if you're looking for a bargain, look no further than Ollie's Bargain Outlet. I'm not regarding the stock as being very cheap right here. I think it's a buy. Much more Mad Money at, including my exclusive with Ring Central. How can I help you? And that's how I think they can make you money. I'm talking with the CEO of this amazing story. Then, good news, if the dog ate your homework, I did it for you. And I think it can make you some money. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.